Okay, accounting 221. It is the 27th of September, a Sunday. I'm glad to be talking to you. And I want to go over a little homework and do a little house cleaning and talk about next week. Hopefully our classroom will be all set. But, excuse me, I have a dry throat. So funny we talk about this COVID thing. You know, I have a child. I'm watching football in the back. I have a child who's 12. Alice is 12. She's in 7th grade. She's a little young for her class. She just turned 12. But every year when the kids go to school, guess what happens? They all get the sniffles, and I've got a case of the sniffles because my kids got a case of the sniffles. What are we to do with this idea of the common cold, which COVID is a family member to, and we're going to see a very interesting fall coming up. Let me make sure I'm recording. I am. We're going to see a very interesting fall coming up as people start to get the flu. You see that they've ginned up the flu vaccine routine because. I don't know. Nobody wants the flu and COVID or some kind of thing like that. But in general, we don't give vaccinations for the flu to everyone. Why? Why would we? The mortality rate only affects the very old and infants. COVID doesn't affect infants at all, as far as we can tell from excess death statistics. Very important that you understand statistics, and very important that you take statistics as you move along in your studies. I'm going to move over here. I don't want to bore you. I know Damon and some other student, Erica, are going, come on, Cleaver, get to the accounting before you go off into left field or down some damn bunny trail, which I'm apt to do because I can't stress enough that the things that are going on today in this United States and in the world are very, very important. You've decided to enlarge your education at a time when education itself is being questioned. So please don't ignore that that's going on. Here's Connect, and I know that I didn't give a lecture, and I might start with a little lecture on 15. I think it was. Here's our class. Spring. No, that's not our class, is it? Is it spring or is it fall? Let's see here. Let's go back to home. Let's go back to switch sections. Fall 122, SV01, no. CB01. Am I in the right place? What are my courses? I want to be in this one. Okay. As we can see, just so you know, if you're one of my students that hasn't had me before, I can look in here into this performance tab and look at reports, and I can go assignment results and view the report, and I can see where you all are. So if you haven't begun, get after it. Let's go. You see who you are, and you can see by this that there are some people who are through chapter 15 or in the midst of chapter 15. So I'm going to talk a little bit about 15 today. Enough of that. Let's go to my library, and I'm going to go to instructor resources. There's a student resource page just like this one, and you can look it up on Google and find these PowerPoints yourself. These are accessible if you have accessibility issues, and these here are, that's the one I want. Now we are still in costing, and costing is it seems like tons of busy work, and it's very confusing. You might be beginning to understand that if you're what you should be getting out of this is that if you can get good at costing, you're going to do well. I'm going to make me smaller so that we can see. Let me put me down in the corner down here. And if you can get good at this, you can go to any manufacturing business or others and say, hey, I can save you some money. It's a selling point for you in the job market, the supply and demand of labor. If you say, I know a lot about costing, I got a feeling that you'll do well, because entrepreneurs tend to ignore cost, and they they tend to be big picture people, and they don't look at the minutia of costing. So job order costing we're going to talk about here, in pricing services, and record flow of material costs and job order costing. Record the flow of labor, record the flow of overhead, and define adjustments. Meaning, I'll show you for underapplied factory overhead. This is the thing that's really going to confuse everyone. This overapplied, underapplied factory overhead. And the best way I can tell you to think about it is you keep making an estimate of your overhead cost, and you try to hit it, and hopefully you're converging, diverging. Hopefully you're converging on your estimate so that you get closer and closer to it. And this is the subjectivity of making estimates, but you're basing your estimate on last year's actuals. So despite variability in costs of all kinds, long-term variability of costs of all kinds, you're still trying to hit that. So we have two systems. We've got process costing and job costing. Process we're going to talk about in chapter 16. That's more like milk, or gravel or things like that. Job costing is custom things, big things, a production of large, unique things built to order rather than mass produced. How many in this stack? 37 in this stack. So I'm gonna bump through them pretty quick. Job order production. So think of that, process costing of large homogeneous products like milk or agricultural products. Job costing, of course, is for built to order things, custom things. So job orders, process operations, custom orders, heterogeneous, right? You hear me say I want heterodoxy in teaching. That means I want all the different opinions taught. I want to teach all different angles of something. That means that means there are different. In this case, there's different products. 1, 2, 3, 4, 5 different products, right? A homogeneous means there's one product. Homogeneous teaching would be orthodoxy. Capitalism bad, socialism good. That's homogeneous teaching or orthodox teaching. And the same thing goes with products. We have one product there. They've got bottled water here. Perfect. High production, low product flexibility. The opposite here. Okay. So here's the activities in job order costing. Again, we have materials, we have overhead, and we have labor. Okay. Let me see. I keep thinking I could get a pen and write on this, but I won't. Now, with materials, overhead, and labor, we have direct materials, remember, and indirect materials, right? And that go into those things. And then in overhead, we have all these three things that go into overhead costs: indirect materials, indirect labor, and the other overhead that goes into that. And then we have direct labor. So direct materials and direct labor can be traced to one. This is cars, one car. You can indirect materials is like vinyl for the seats. We have rolls and rolls and rolls of vinyl. Those are indirect or repair now. No, I don't want that. I'm going back 15. I should have repaired it, shouldn't I? So we have direct and indirect. Indirect might be the overhead might be close. Might be and I said that wrong because vinyl for the seats would probably be direct because you could trace it directly to the seats on every car. Indirect would be like grease or cleaning supplies for the factory floor or things like that. And I'll put these down here. You can see explanations for this. So production activities. Then we have direct labor, of course, and indirect labor. Well, we would be part of that overhead of, we meaning accountants would be part of that overhead cost that was indirect. We can't really trace it to a single car. Okay, so there's that in case you want to read that. Cost flows in manufacturing. Cost flows. Raw materials have indirect and direct materials. Work in process, job is being produced. Finished goods are completed goods. Cost of goods sold, goods which are sold. Subsidiary records store information. Well, what the hell is a subsidiary record? Each division or each silo, we call them silos even, or sections of the business. You might have an accountant. You may be hired as an accountant for the factory floor only in the finished goods area. So you would keep records of all the completed goods. Well, that would be subsidiary, underneath, subsidiary to the main cost flow record or ledger being kept by one of your higher ups. And you can see that, you as a lower level accountant, you would rise up and see how all of these came together. Somebody's keeping track of all the raw materials that are being bought. Somebody's keeping track of work in process, so that when we stop, remember our accounting cycle, when we stop, we're going to measure how much work in process we have. Okay. So explain job cost sheets. This is so simple. It's sort of when you look at it, you go, God, does one of these things really exist? Turns out they do, and they're really handy. Oops, why am I not able to do that anymore? There's a job cost sheet. Oh, there we go. Here's the explanation of it. As you can see, in this thing, what are they building? They're building alarm system on Ford Expedition. So they've got a car and they're going to stick an alarm system in it. And they've got all these different costs. These are requisition numbers, meaning somebody sent a requisition over to a warehouse to get these materials, wire and horns or whatever they need. And here's direct labor, $1,600 to put it in. $1,000, well, $600 of materials, and direct labor is $1,000. Our overhead was 160% of direct labor costs, so $1,600. The whole job cost $3,200. Where did this number come from? This 160%? We made it up. We decided as a group of accountants. We said, okay, what's it going to be? I think we added up all of our actuals from the year before, and we said our direct labor is running at about 160% of our direct labor costs. Our overhead is running at 160. Did I say that right? Our overhead is running at 160% of our direct labor cost. Is that correct? I don't know. We'll see at the end of the year. right? And we've got flow of materials, describe and record the flow of materials in costs and job order costing. So we're taking this section, the materials, okay? So how do we do this? This is, if you walked onto a factory floor, and I hope you get to do this, I would fast, at the end of my drinking, I went to work in a factory because I was curious about this process, and they would hire me. And I, in Boulder, and what I did was I got to see this whole system up close and how it worked. So I have some direct knowledge of exactly what they're talking about when they're talking about receiving reports. What's a receiving report? It's the thing on the dock, on what we call the loading dock. There's a receiving clerk there. They used to call it a clerk. Now they call it some fancy goddamn name. But what you're doing is, when the truck shows up, you're going to the truck driver, to the cab of his truck, and he's going to give you an invoice, a piece of paper with what's on that truck. They used to call it a bill of lading. Bill of lading. That's an old word for what the load, the bill of lading on the truck or the railroad car or whatever freight system is bringing this shit to you. So then you look at what's in those receiving reports, and these are materials ledger cards. They show you, amplifiers, speakers, alarm system, wiring. Okay, this is all part of our job order for our wiring system for the Ford Explorer or whatever the hell it was. Then we have requisitions of direct materials. So the person on it might be you who's in charge on the floor. You're deciding, you've got 10 cars in there, and you go, okay, I need 10 sets of wiring. I need 10, I need 10 alarm system wiring. I need 10 speakers. I need 10 of this. And you bring it all in, and you make requisitions on that job. And here they are. You can see them, job B15, B17, B18. Those are all different jobs. Now you're starting to get a feel for what job costing is. And then we have indirect materials. What do we have here? I wanted to make that bigger. It says requisitions. Let's see. I can't see it. To illustrate the purchase of material, road warrant 27 materials on credit. In their receiving report, the entry is posted on raw materials inventory and accounts payable ledger accounts. So here in this explanation, it shows you where all that stuff goes in the ledger. And this is the factory overhead ledger of indirect materials. Now let's look at the ledger's card. The ledger card. Here's alarm system ID, wiring for stock number M347, 1 unit, maximum quantity 5 units. Then it's got a bin number and things like that. So you can go and pull it from the bin and take it down there. You can start, if you really think about this, and I urge you to go work at a factory, you can see how this works in action. It was really, putting it together is always interesting because, somebody's got to go pull this material. Then we have this material requisition, right? Somebody ordered the material, one by Mr. Luther or Ms. Luther, one of these, right? And the quantity is provided by Mr. Bateman, okay? This is a wiring, wiring, and it's got a number so we can keep track of it. So you can see that these subsidiary ledgers have to be kept with accuracy so that we can do the accounting we need at the end of the period, or, on December 31st or whatever. These are different jobs, right? Different cars. And these are direct materials that are requisitioned. Here's our total materials for the day. Here's how it would go into a GL. Work in process inventory and raw materials inventory. This is it. So this is your journal, right? This is your journal to record the use of direct materials. Remember, left, debit, right, credit. We're gonna debit our work in process inventory and credit our raw materials inventory. because the stuff's coming out of raw materials and going into work in process. We're just switching assets, right? Remember, assets equal liabilities plus owner's equity. We're on that side of the equation, the asset side. We're just switching assets. Okay, flow. The flow of labor costs and job order costing. Here they go. So we're all done with materials. Now we're going to talk a little bit about labor. Right? We've got these time tickets. Perfect. Simple. Time tickets, materials, labor overhead. Remember, here's these job cost sheets. So we're putting direct labor into these. Indirect labor goes into indirect materials. And this is, remember, this on the bottom is the factory overhead ledger. Okay, so we're calculating our overhead while we're calculating these job cost sheets, right? So these are salary contracts and time tickets for indirect labor. We can't trace this labor to one car, right? It's supervisory labor. It's the accounting department. It's things like that. All right, here's the time ticket. That's what it looks like. I'm not going to spend any more time than that on it. Here's the labor ticket as it goes into the work in process inventory and the factory wages payable, right? There's the two. We would debit the work in process inventory by $4,200 in direct labor. And then we would credit factory wages payable. We'd make a payable a liability. So now we've got two sections. We got an asset and a liability, because we still have to pay that expense. When we pay that expense, we'll wipe out that liability, right? Remember that? Okay, now the flow of overhead costs. Here we are. Here's the explanation below. Fascinating, right? This is simple. Overhead costs, unlike direct materials and direct labor, actual overhead costs are not traced directly to individual jobs. Yes, over and over we say this. So we have this predetermined overhead rate. Where did we get it? We estimated it. We made it up, right? And then we had estimated overhead cost divided by estimated activities. Applied overhead is overhead rate times actual amount of activity base. What's an activity base? Labor. But it doesn't have to be labor. As from our first example, it could 160% of labor is our overhead. Yeah, why'd we use labor? Oh, I don't know. It seemed like that seems like the most accurate way to go about it. But we could use 160% of materials. And then we adjust COGS to the actual estimate, right? End of period. End of period, I'm pointing at the end of period. We adjust our overhead to the end of period, okay? So how do we do? Road warriors use a predetermined overhead rate, POHR. I love these acronyms, like you're going to remember that. Based on direct labor costs to apply overhead to jobs. So we estimate overhead costs, and we have an estimated activity base. Whoa, how good is the damn rate if everything's estimated? Not vary until we have some historical data to compare it to, and then we're able to get it closer and closer. Make sure you read the explanation down here so you sort of get what we're talking about. So here we go. Work in process inventory and factory overhead is 6270, right? Apply overhead at 160% of direct labor. Again, why do we do that? Because I said so. That's why. No other reason than that. You're not going to find it in the question or anything like that. It's given. It's what we, well, you might find it in the question. You should find it in the question, but it's given. You're not going to find it hidden in the data. So in the list of, you're all looking for it in the list of numbers. It's not there. It's given. It's 160% of direct labor. So you get direct labor and you multiply it by 1.6. All right. Here it is here. Direct labor cost, applied overhead, 67.20. So you apply it to each one of these jobs. It's different for each job. Now we got to record the actuals. We now show the accounting for actual overhead costs are not recorded on job cost sheets. Remember, it's not recorded there. Factory overheads includes all factory costs other than direct materials and labor. Two major sources of overhead costs are indirect materials. Oh, is this just dumping me out because it thinks it's fun? I may be having internet problems. I hope not. I'm still recording. That's a little annoying. All right, let's go back to there's corruption there somewhere. Try a new one. Boom. 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 And we are somewhere here. Nope. We're here. Nope. We're here. So we show the actual overhead costs here, right? Indirect material, indirect labor, and other. What are other? I don't know. Debits factory overhead general ledger account with the credits to various accounts. Next, we show how to record journal entries with actual overhead costs, and here they are. Record indirect materials used. These are materials that we can't directly trace to a single product. And then indirect labor used is here, right? And then we have other, rents, utilities, prepaid insurance. Does that explain other adequately? Geez, I better move this. Darn it. There it is. Right. Good. I want to put these up here just to show you the explanations so you can see them. But you can follow. Oh, you can't. Can you follow along with the other stuff? Anyway, so here's how we adjust it. Right? We have to compare our actual to our estimate. So now we got to make an adjustment. Of course, of course there has to be that you know enough about accounting now to know that, well, at the period end we're going to have to make these adjustments, and that's going to be a thing. And so, oops, dang it, I'm just having all kinds of problems today. I'm not even like completely in this box, which I'd like to be. Anyway, how weird. All right. And this won't let me go down. Yeah, it will, but it just makes it bigger. All right, people. I'm going to quit fooling around so that I get on with it. So here's the adjustments. We undercosted or we overcosted. Hopefully we overcosted, but you don't want to just highball things so you look better at the end, right? That would be fraud. We don't do that. We're trying to hit it just right. And you tell your people that, your people, I mean, yeah, you're going to be the manager of a bunch of people, and they are going to be your underlings. And those people, you're going to go down there and say, hey, I want accurate shit. Don't candy coat your estimates. Does that make sense? Candy coating. It's a phrase. If English isn't your first language, don't make it sweeter than it is. Don't candy coat it. I want, shit in, shit out is what we say, and that's another phrase. If my data is bad, I'm not going to get good results. We need accurate results. Don't fall into that trap of not wanting to tell your boss bad news. That's a bad trap. Always be honest with your estimates. Determine the adjustments. Here's how it goes. There it is, right? And it would debit COGS, right? Cost of goods sold, and credit your factory overhead, of course, right? It makes sense when you think about it carefully. All right, job over costing, pricing services, much simpler, right? We've just got direct labor and overhead. If you're a service provider, if you're doing something like providing accounting lectures, direct labor is, me shooting the shit today on a Sunday. I'm worth about $10,000 an hour. You may not agree. There it is. So that's the end of the chapter, and that's chapter 15. And I can take your questions tomorrow night. But now what I want to do is go to the homework, and let's go to McGraw Hill here. Go out of those and go back to home. And I want to go to 15 homework just to go through it with you so that you see it, and then I'll shut up. And you can see 7 students not started. Somebody submitted. I'm not going to say any names, but it sounds like Erica. I say these things to be funny. Maybe you don't think so. Required information. Look at, here's the required information for the problem. And here is the answer. The total production cost for April, direct labor, direct material, applied overhead. There it all is, right? No further explanation needed. You should be able to get everything out of here that you need. Okay. Number 2, here's all what you're supposed to do in number 2, ABCs, A through J, assignment of any underapplied or overapplied. Remember, at the end of the period, okay, let me get them all in one screen. Here's that adjustment. So they lowballed it or highballed it or whatever they did. Finished goods inventory. Look at all work in process. So it's not all that difficult when you think about it. It's just they pound this busy work into you so that even though this is going to all be done electronically at whatever factory, wherever you work at a factory, or if you do in manufacturing, if you know all these, I think there's value in it. I wouldn't teach it. I would skip over it if I didn't think there was value in understanding how all the pieces work together, so that you can virtually walk onto any factory floor and go, oh yeah, I know what's going on here. You guys, there he goes, he gendered it. You men and women are using a job order costing system. I know how that works, and I can tell you the steps. I can look back in my notes, and tell you the steps to that and go over it. All right, here, look, we have all this information, and they're asking us, post any entries related to factory overhead to the T account below. Look at this, is a T account. They made you a little T account with notes over here, right? Indirect materials, direct labor, debit, credit, right? So there's the overhead applied. And then in 2B, what do we have? We have 11.9 left, right? We have this 11.9 in a debit balance. Where does it go? Well, it goes to debit COGS and credit factory overhead, right? So what was our overhead applied was 20,000, and ending balance from the trial balance is here, 25,000. We had indirect materials, indirect labor, and under applied overhead. It was under applied. We had more, right? So that's where that goes. You add it, debit, add it, right? Okay, simple enough. And here's the explanation. You had $25,000 in ending balance from the trial balance. Then you applied jobs 402 and 404. Then you had additional indirect materials, additional indirect labor. See, that was the extra 5, that extra amount. Yes? Okay, there's number 4. And how would it go on the income statement? Bagardo Bay, and here's how it looks on the balance sheet. All right, from this information. Balance sheet, income statement. Here's a little explanation of retained earnings. 83,000 plus what was that? Our net income, 5,700, right? Net income, right? Okay. Retained earnings, 83,000 plus 8,700 gives us 88,700 right here in our retained earnings. Okay. If you're not understanding that stuff, go back and look at last semester so you can refamiliarize yourself with that, with the accounting equation and how it works, and all how the different financial statements work together. Here's 5 and 6. Here's all the information. My numbers will be different from yours if you're new to this McGraw-Hill system, but this will at least give you check figures of how it should go together according to what numbers I have. And here's a job cost sheet for each job, right? Just getting you to do that. And here is journal entries for that. I think I fit the whole thing right there. Fairly simple, right? Look at this factory overhead, and then we had $28,000 in inventory here, factory overhead. Right, here's the explanations for that problem. Completion jobs, overhead to jobs, cost of sales, applying overhead to jobs. 10-4, 7 of 8. Here's the problem, the information. Determine the predetermined overhead rate for the year. Determine the total overhead cost. Determine the over-under. Assuming any over-under, prepare an adjusting entry. So here's what it looked like. I think I can catch all of it here. There's 1A. There's 1B. Look at our job numbers and our overhead costs. There's our factory overhead applied and the adjustment of 35,600. Now you can see all of this to get that 60%, right? Predetermined overhead rate. That's how they calculated their predetermined overhead rate. And then you decide whether it's a good rate. Hard to say. All right, number 8, more of the same. It gives you a lot of information here. I love these problems because it really takes 2 screens to do them. Here's all the job cost sheets in the general journal. But first, material requisition. This might be what you're looking at to complete the material ledgers cards, right? And it all came off that initial information. Here's the job cost sheets. Pretty cool. You can see it in action. I just want to give you a real feel for this. You're going to go back to it if you go deeper into costing structures. And here's the GL. Okay. GL, I call it the GL. It's a general journal. I'm sorry. The ledger is what happens after the journaling occurs. That's just a bad habit of mine, among others. Okay, so there you are. There's some of the answers there. Okay, and I'm going to see you guys tomorrow night. I'm going to call that macaroni. I've talked for almost 40 minutes, which is enough of me. that'll take care of 15, and we'll go right on to 16 tomorrow. So I look forward to seeing you in Carbondale tomorrow. Enjoy the rest of your Sunday, and I'm going to post this on the discussions tab so you'll see it and all that. So anyway, have a good day.